Good morning, everybody. Excuse me. Prognosticator. That's a big word, Ron. That's too many syllables for me. I was raised in the South. Good morning, everybody. It's great to see you here this morning. Hope everybody's doing well. Some of you are staying busy. I like that. Victor, is interesting. You mentioned trade balance numbers came out better than expected. Um, the news is interesting to me. Good morning, Andy. It's great to see you. Um, the news is always interesting to me because my only thoughts on news in the entire time I've been trading have been don't trade into high probability news because it can affect the market. I've never made a decision on entering a trade based on the news. So, in full admission and maybe a little guilt, I don't pay attention to what these mean. When it says that the trade balance is better, I assume it's good news, but I don't know why. And I don't know what the reaction could be, if it's good, if it's bad. So every morning I come to forexfactory.com and I just look for these red boxes. And I choose not to trade if a red box is present because that red box could upset the market. That could make a spike. It could make something go a little nutty. These orange boxes, President Trump speaking at 8 a.m., it definitely affected the market. And we knew that it was medium impact. Nobody knows what he's going to say. So nobody knows how anyone's going to react. And these news releases kind of give you the heads up. Hey, there might be 10,000 people waiting to go long if the news is good. And there might be 10,000 people waiting to go short if the news is bad. So when you know when the news releases is, it creates a little bit of advantage. Some days I click on them. So if you did want to know what the trade balance was, it talks about a little bit about the notes and why it's important. If you are interested in stuff like that, I'd rather draw rainbows and unicorns, but that's just me, right? Everybody's different. Um, but this is always my first stop because it really does. It creates an advantage. Good morning, Steve. And then, guys, our day is going to revolve around three things. It's the same three things that our day revolves around every day. It's going to revolve around momentum, clear path, and an entry. And whether it is TradingView or whether it is NinjaTrader, it all goes back to momentum, clear path, and entry. And they're decided just a shade different on the two charts. We will cover both platforms. I will talk about NinjaTrader first because that's where the majority of my users are. When we talk about momentum, in the small chart showing the entry 10 bars to the left again, Andy, Jason may be able to fix that for you. I don't remember what the fix is. It has something to do with either timestamps or alignment. If it's concerning to you, Jason could probably take a look and get you squared away on that. I've seen it before. I don't recall how to fix it. But I'll keep my eyes open on your charts because you're taking great entries. Woo, there we go, Steve. Had so many things going on last Friday, the 1st, and yesterday. Couldn't get these trades annotated and posted. Sorry the delay. That's all right. It is fixed. Awesome, Andy. Guys, I want everybody in the room to see what Steve just did. Steve said, hey, Mark, I've got about 8 or 9 trades I need a little feedback on. I annotated them. I told you what I saw. Do me a favor. Give me your 2 cents. Steve Diego, I am happy to go through each and every one of those. And that's what the classroom is, guys. We talk about some basics first. We talk about what's called a high probability trend trade. This is a trade that only has 3 rules. Each rule creates an advantage. They're down here in yellow. When you have 3 rules met, you have momentum, you have a clear path, and you have an entry area. And that's the recipe for the highest probability trend trade you could ever take. Now I'm going to tell you guys, once you understand how to identify momentum, and once you can determine that your path is clear, you have everything that you need to be successful with the software. You have everything you need to write your own plan. You have everything you need to find profitable trades. We talk about this entry specifically first. It's the entry for a trend trade because it helps you understand where to put stops. It helps you understand where the market should not go. And it really keeps you focused on advantages, guys. So it's 3 advantages to create a trade: momentum, path, and entry. And when you have them, each indicator on every chart agrees with the rules for the trades. We call it high probability. This is the trade that you get excited about. This is having an advantage. This is having an edge. When you understand this trade, what happens is you start to see more. You start to see more opportunities. You start to recognize different patterns. The market appears to slow down. So I focus on this first trade because it teaches you to read your indicators. And what you're going to find, and this is sad news for a lot of you, 95% of your day is going to be spent reading your indicators. 5% of your day is going to be spent actively trading because you can identify an advantage. When one of your advantages goes away, and it doesn't matter which one it is, whether it's momentum, path, or entry, guys, you find yourself in a medium probability scenario when one of the advantages goes away. Medium probability scenarios must be managed a little more assertively. You're going to take profits a little faster. And then finally, guys, when you look at your charts and you say, oh my gosh, I'm missing momentum, my path isn't clear, it's okay to do nothing. It's okay to say this is low probability, probably not my best chance of success. You are in control of the entry. You are not in control of the market. You are in control of the entry, whether or not you pull the trigger. The only thing you will ever be able to determine 100% and have 100% control over is if your rules are met. But if you look at your chart and they're not, you still may enter. And that's okay. That's your right. But knowing what's working for you and against you, it's going to help you make decisions, not only on entering the trade, but also on how aggressively that you manage it. So we're going to go back and we're going to talk about these 3 rules, and they happen on only 2 charts. So if you're with me on NinjaTrader, you have a large chart and you have a small chart. And your large chart will define the direction of the market. That's going to let you know which direction you should be looking for your rules to be met. If the background is green, that market's going up. If the background is red, that market's going down, just looking for rules to be met in that direction. It will define the momentum in the market using the very first bar. Momentum is our first advantage, and rule number 1 provides it. So if I have momentum, well, then I'll look and define the areas, whether or not they're problematic. That's going to be rule number 2. Making sure that you have room to your profit targets, making sure that you're not trading into an area that could stop the market. Once the first 2 rules are met, once you have momentum and path, you'll go to a smaller chart, a faster chart. This is a refinement chart. The inner workings of this 1 bar on a 13-2 chart, your large chart, your slow chart, can be seen as about 20 to 30 bars typically on this smaller, faster chart. We use that refinement process to pinpoint entries. You're going to recognize where the market is likely to continue with the trend that's already been established. And by using this refinement chart, you will be able to reduce risk dramatically, and it's going to increase the distance that you have to those profit targets. So rule number 3 is just your entry rule, and that's what we're using the small chart for initially, to get into the market at the best of the best spot, and we'll use it for management as well. We use these 2 charts. Goes back to it again. You're not in control. You never will be, guys. Your 2 contracts means nothing to the people in control of the market. So think of your large chart as a large crowd. And these are the men and women that can push the market, that can create trends, that have that momentum. And most importantly, these are the men and women that are reacting at those key areas. This is where buyers buy and sellers sell. And guys, the large crowd wins. The large crowd, they can't be beaten if they don't want to be beaten. But your small chart is the small crowd, and they try to beat. They're like that little guy that just keeps getting up, right? And when everything says up on your large chart, these are the yahoos that push it down. They've got just enough money and influence to create what we call a retracement. And a retracement is a small move counter to the underlying trend. So when they create a retracement, it's going to die out typically 70 to 80% of the time. Your rules for entry have you entering right at the most likely spot for their failure. That is the point where the market is most likely to bounce and continue with everything that these guys want. So if you focus on this one trade first, this high probability trend trade first, you're going to find yourself recognizing momentum, a market that's really hard to stop. You're going to understand when those key areas on your large chart could be problematic, making sure that you have room to your profit targets, and you will be able to define precisely where the market is most likely to continue. You're going to do it with a couple set of indicators that are on both charts. The first one I want to show you are trigger lines. Trigger lines are moving averages. You don't even need to know that. You have small triggers. It's going to be the solid lines. When they're green, they're up. When they're red, they're down. These are faster moving average. Then you're going to have large triggers, and these are going to have dashes on them. And these are a slower moving average, guys. You're going to use trigger lines to define the momentum of the market with rule number 1. You're going to use trigger lines to recognize those termination conditions, areas that could stop the market for rule number 2. And you're going to use these large triggers to define your perfect entry on that smaller, faster chart. So trigger lines will show up in everything that you do with the software. And to be honest with you, trigger lines are probably the most impactful indicator that you're going to use. Charts have areas as well, and all the areas have names, and I'm going to encourage you engineers out there, you don't have to know how Fibonacci lines are created. You don't have to know what it takes to create a yellow one-to-one. Just know the names, guys. So divergence is a loss of momentum at a pivot, and your software does all the calculations for you. And if we lose momentum right here at this high pivot, you'll see a negative number and a magenta line. The negative number is irrelevant. It has nothing to do with anything. It is a byproduct of the calculation, but doggone it, we want to assign it some strength. Don't resist that temptation. If there's a loss of momentum at a low pivot, you'll see that negative number again, and you'll see what we call a cyan line, a baby blue, hot pink, right? Let's go back to the 80s. And guys, all divergence means is that there was a loss of momentum. So anytime you see this line, I want you to say, wow, there was a loss of momentum. You're going to see red Fibonacci resistance, and when the market is trending up, this is a point where the market may stop, may bounce, may reverse completely, or just may break. You'll never know what the reaction is, but you'll know about that spot long before the market reaches it. Fibonacci support does the same thing in a downtrend. The market may bounce, may reverse, may break, and you'll see it before the market ever reaches it. You're going to see yellow one-to-ones, resistance if the market's trending up, support if the market's trending down, and we've got that mid band, and that's just an EMA, an exponential moving average. There's some big words. Guys, it's magenta when price is below it. That means that it may behave as resistance. It is green when price is above it. It may behave as support. So these areas on a large chart are precisely where the large crowd is probably making their decisions, reversing, exiting, entering, and you're going to know about it before you get there. Areas on your small chart are where we're going to expect that small crowd to fail and where the market is most likely to bounce and continue with the large chart. So we're going to learn the trigger line of Fibonacci rules. I'm going to break them down individually, guys. We're going to spend a lot of time in the live market, but I want to lay this foundation for you because every chart presented in this room, we're going to go back to momentum, path, and entry. Every lesson that I give goes back to momentum, path, and entry. No matter what kind of trade you're taking, those tend to show up. So we're going to learn the trigger line of the Fibonacci rules for when it's okay to trade. It's okay to trade when my rules are met because my rules have been proven to win more than they lose. My rules describe a pattern that I can prove through study, through practice, through simulation, has an advantage, has an edge. It's okay to not trade if your rules aren't met, if you don't have that edge. Everybody in the room has the ability to simulate. I encourage you to simulate. Do not wait until you think you have this down to practice. Get in, take trades, learn how to move stops, how to enter trades, guys. Make all the mistakes because you're on simulator. It's the batting cages. You can't strike out. But to get to where you want to be the fastest, and I'm talking to my newer users, I'm talking to my demos, post your trades in the class. Show me what you saw. Tell me what you were thinking. And what happens is if you drop something in my room and you say, hey, Mark, there's my strong triggers, rule number 1. This is how I read my indicators. Mark, there's my potential to break, rule number 2. This is my chart read. Did I read it correctly? We're going to talk about it. This was my entry and this was my exit. And just do me a favor. Did I do it right? Did I read it right? Did I see this right? Did I make a mistake? Give me that private session and I will. And what you're also doing through annotation, and I can't stress this enough, guys, annotation is going to shorten the learning curve. You are literally writing a recipe for success through your annotations. Because when you look at it, I have strong triggers with the potential to break, and I took a pullback to an area inside of triggers. Those are all 3 advantages. And now I know exactly what I'm looking for, exactly how to do it, where to do it, how to manage it. And it's also going to show challenges. If you made a mistake, maybe you traded into a termination condition. Maybe you didn't have the best momentum. We'll talk about it. We'll talk about how to fix it. And your annotations are going to help you identify mistakes to avoid. So every time you post in the room, you're going to do me that honor. You're going to say, Mark, check it out. Strong triggers. I had 3 triggers through. There was no divergence, no loss of momentum, so I entered the market right at the area inside of triggers. And Mark, I was able to get paid, and when divergence prints, I got out break even. Hunter, that's a quick, easy $100 that's 100% rules-based. And guys, that's what we're going to do every time. You post in my room, I'm going to give you feedback. The second thing, to get to where you want to be the soonest is just use the spreadsheet that I'm about to drop in the room. If you are in NinjaTrader, this is your spreadsheet. I just dropped it. If you are using TradingView, this is your spreadsheet. I just dropped it. If you are in NinjaTrader, here is your plan. This is the KISS plan. This is a plan designed to optimize your chances of success. Not only are we going to talk about the rules, I'm going to give you a roadmap to use them with the highest chance of success. And if you are in TradingView, there is your TradingView plan. I will give you guys everything that you need to be successful with the software. Keep it simple. Focus on one trade first. Get good at one trade first, and then the next trades will come. But you've got to learn what the looks are, guys. All the market does is move in patterns. That's it. The market does the same darn thing every day. We've recognized a pattern that revolves around momentum, path, and entry that typically wins up to 70 to 80% of the time. That's the potential for this trade. When you learn this trade, you start to find ways to capitalize on other trades. So we're going to talk about these rules. The spreadsheets for NinjaTrader, strong triggers, 50 pictures clearly defined, commit it to memory. Clear path, high probability trend trade entry. This is your green light. This is your go. This is your rules are met. And then the opposite of rules met is rules not met. Those are in red, helping you pump the brakes, not give away money that you shouldn't be giving away. There are over 500 pictures of Nexgen users posting in my room saying, hey, Mark, check it out. This is what I did. So what I might do from time to time, just to make you famous, is I might steal your picture. And I might go to that spreadsheet. And guys, I'm constantly adding. And I don't think Hunter's in the Hall of Fame yet, so I want to make sure that he is. And I'll put that picture in there, and we'll call it Hunter's Perfect 50-50 Trade. And guys, it is. It's Hunter's trade. This is Hunter's plans, Hunter's rules, Hunter's execution. Don't be Hunter. Be you with the same great plans. So scroll through, look at these. You'll see that the pattern repeats itself all the time. Management ideas, patterns that repeat themselves. A place to put your pictures, to build your plan. And then finally, a trade tracking sheet. And guys, this trade tracking sheet is on both. If you're on TradingView, here's the same study material followed by a tracking sheet. This tracking sheet is one of the things that's going to get you to where you want to be the fastest, because you have the ability to take pictures, to annotate, to put in the class, and to get feedback. So every morning, it takes 3 to 4 minutes, maybe. Look at what you did yesterday. Ask yourself, what worked? What didn't work? What felt easy? What felt forced? Guys, your emotions are going to be a very big reflection of how well you're following rules. But even more importantly, after you post in the room, don't let that be the end of it. If you post in the room, and it turns out that this wasn't the potential to break. Maybe you traded into a term and lost, right? And I guess that would be down here. Maybe you traded into a termination condition and lost, but you didn't recognize it in the moment, but the feedback was, hey, check it out, this could stop the market. What happens is if you go back and study that tomorrow, you're going to start to see the same thing repeating. This is your thing. This is what you're working through. This is going to keep you focused on addressing the great things and avoiding the bad things, guys. Mine was into termination conditions. I traded into lines that could stop the market like I was getting paid to do it, and I needed the feedback from the room from John Novak to overcome that hurdle. So use your spreadsheets, go back and study it, learn these simple rules, and it's going to open every door that you need open. And it all starts with strong triggers. So strong triggers is pretty simple. If the market's going up, green background, both small and large triggers must be green as well. That's your cheat code. If the background is red, both small and large triggers must be red as well. You can't have strong triggers if the colors don't match, whether it's background and triggers, whether it's triggers with one another. So strong triggers means that the small triggers are up and above the large triggers. The large triggers are wide, and guys, there is space between the small and large. Doesn't matter how much space, but there is space. And I want you to picture scissors that are open. Someone in the room once said, when the scissors are open, they can cut you a check. In a downtrend, smallers are below the large, large are wide. When those scissors are open, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, OFM, is what you're going to see annotated on charts. Odds favorable momentum is your first advantage. Odds favorable momentum is difficult to stop. Odds favorable momentum can break key areas. Odds favorable momentum can cover up some of the mistakes that we tend to make as new users. So strong triggers is rule number one for a reason. But momentum doesn't last forever. When those scissors close, when the small triggers work their way back inside of the large triggers, this is what we call a weakening of the large triggers. And weak is the opposite of strong. And when the odds are favorable for the market to continue down, weakness lets me know that anything can happen up or down. This is when retracements from the middle of nowhere seem to happen. This is when key Fibonacci areas are more likely to hold. So momentum is momentum, and it's always momentum. And let's go to a live market, and let's open it up. Did crude oil just stop, or did my crude oil just stop? I'm connected. I feel like it's been there for a while. Nope, it's moving. Strong triggers means that the smalls are above the large, that the smalls are below the large. So can you guys give me a why? On my most current bar, I do in fact have strong triggers. They're winding up for something, right, Victor? I do have the advantage of momentum. Is everybody good with that? Eric TK, welcome to the room. Guys, that is your first rule, live, right in front of you. If we go to the S&P, small triggers are inside of the large triggers. Guys, this is not a strong trigger look. This is what we call a weak trigger look. And when the triggers are weak, anything can happen up or down. It's let it be black and white. Let it be one or the other. And what you'll find is that by not overthinking it, by focusing on that very basic, is it strong or is it weak? Guys, it keeps the guesswork out. And then once you have strength, once you have that separation, we have to make sure that there's nothing in the way to create a problem. So, hey, it's good to have you, Eric. The large crowd makes decisions at areas on your large chart. This is the easiest way to remember it. The people in charge are likely to create reversals. They're likely to fight one another. They're likely to just make decisions at lines on a large chart. And it doesn't matter if it's Fibonacci resistance, if it's Fibonacci support, if it's yellow one-to-ones, if it's a divergence high or low. Each of these lines has the exact same weight, the exact same pull. So if we're going to identify termination conditions, we have to let that large crowd get to the line. So price bars push up and they reach Fibonacci resistance. And right at Fibonacci resistance, once price reaches that area, we're going to become trigger counters, guys. We're going to count the number of trigger lines that have broken through. And does everybody see that both small and both large triggers have remained below resistance? This is going to happen pretty much every time you reach a line. This is your look for a termination condition. This says to me, this is where the large crowd may exit. This is where the sellers may take over. This is where fights could happen. This is an area that could break. I'm not in charge. I'll never know what the reaction's going to be. So if I reach a line and 4 trigger lines remain below resistance or 4 trigger lines remain above support, that is your termination condition defined, guys. That is an area that could stop the market. That is the area that could create that untradeable bounce. And just a little example of how effective these termination conditions can be. Crude oil was absolutely putting on a clinic. From resistance to support to resistance to support to resistance, potential to break but didn't, and now the market is pushing up. Do you guys see that? Resistance holds, support holds, and you've actually identified an area of consolidation. The market reversed from resistance. The big push started up from one of these divergence lows at the bottom. Guys, you know about these long before the market ever gets there. What a great place to take profits. What a great place to sit on your hands and do absolutely nothing. So, lines on a large chart can stop the market. If absolutely no triggers are through, guys, it's a termination condition. But I told you that you're going to be trigger counters, and I'm going to show you exactly what I mean. So when price reaches an area, when price reaches an area, your trigger lines will tell you everything that you need to know. So here, hey, good morning, Crowbar. Price reaches yellow one-to-ones, and we go into that. Where are my triggers? What are they saying to me? 0 triggers have made it through the one-to-ones, so I'm going to assume that the area is going to hold. I'm just going to believe that that area is going to stop all forward progress, that if I trade into it, I'm committing financial suicide. And I pause and I hit the brakes and I wait a second. When 2 trigger lines, the small triggers, get above this area, guys, that's when it has the potential to break, but this is not your best look for a breakout. 2 triggers is kind of an iffy, it could, it might not, I don't know, I don't feel super confident. Once 3 trigger lines get through, both small and 1 large, now that breakout is a little more imminent. Now there's a higher chance for that breakout to work. And then once 4 triggers break through, guys, that area is done. It's broken. It's clear. If it was resistance, it behaves as support. If it was support, it behaves as resistance. And just one more time to show that example of how that works. When support gets 4 triggers through, does everybody see how it became and behaved as resistance? Pretty cool, right? And when triggers started getting above, that resistance begins to behave as support. And you see this a lot throughout the market, guys. So price reaches an area. Let's count triggers. And the triggers will tell you everything you know or need to know. So far, so good. We've defined momentum and path. And guys, once you define momentum and path, you really do have everything you need to create a plan that just fits, that has opportunity, that creates potential. We're going to define our entry on a smaller, faster chart. And the language is that you're going to use a limit order to buy or sell a pullback at an area inside of triggers. It's a mouthful, but if you learn that phrase, buy or sell a pullback at an area inside of triggers, what it does is it makes it so you never miss your entries, guys, and you'll actually call your shots. So when the large chart has momentum, when the large chart hasn't reached trouble, guys, the market's trading all the way up here at 97.05. This is when you've made the decision, I need to get into this trade. Hey, what's up, Pibbies? That is when the entry sequence starts. So the entry sequence says we're going to buy or sell a pullback at an area inside of triggers. So a pullback begins with a reversal bar. This reversal bar says, hey, the small crowd is fighting. And if you jumped in over here because you had that fear of missing out, this is a great indication that that up move is over and now the retracement is more likely starting. Guys, that retracement can be defined where it's most likely to go, somewhere from the top of the large triggers to the bottom of the large triggers. Now, you're wondering, Mark, why are there two sets of large triggers on my small chart? You mathematicians understand the regression of the mean. Price returns to the moving average on the large chart and on the small chart. So we've put your small chart large or your large chart large triggers over here on your small chart. These are your synthetic. They look kind of stepped. And these trigger lines from the top line to the bottom line define where that retracement is most likely to occur, where those down bars are most likely to continue down. Trigger lines are not your entry, guys. The rule says buy a pullback at an area, at a fib, at a midband, at a yellow 1-to-1 inside of that retracement zone. And this becomes your entry for the highest probability trend trades. So if we go through it, the reversal bar begins the pullback. The reversal bar is not your entry. The trigger lines define where that pullback is most likely to go, but the areas inside, and guys, I want you to really embrace that phrase, areas inside of triggers. That's where the market is most likely to bounce. That's where the small crowd is most likely to fail. And guys, that's where it's most likely to continue with all those large chart advantages. So reversal bar, define the retracement zone, define what can create a bounce, and sometimes there's multiples, creates a window. You don't know if it's going to go from the top or the bottom, but because of the large chart advantages, limit order is activated 2 ticks above the highest point of support inside of triggers, closest to the reversal bar. Because remember, your large chart is absolutely flying and there's nothing in the way. We're not expecting the small crowd to get too terribly deep in that move. Let's get the next picture because this is futures, ladies and gentlemen. We don't care if the market goes up or down. We're going to find a way. Reversal bar, define the retracement with triggers, establish where the bounce is most likely to happen, areas inside of triggers, activate your limit order, enjoy. Guys, this is the 3 advantages: momentum, path, pull back to an area inside of triggers. You guys that want to study, you folks that want to get ahead faster, you can go back on a large chart and anytime you see momentum and path, circle that tail that you see. That tail is this pullback. And we don't trade the tails, but this is a great way to prove the pattern because if you circle the tail or square the tail and it lines up with areas inside of triggers, guys, this is your pattern. Commit it to memory. This is the same pattern that you're going to see on this tracking sheet in the client trades. So let's just click 1 or 2. With momentum and a clear path, there's your pullback to resistance inside of triggers. And sure enough, it works out. Strong triggers, 3 triggers through, pull back to the area inside of triggers, and sure enough, it works out. Does that make sense, everybody? This is your Ninja Trader, highest probability, best of the best. Let's go learn how to be a chart reader so that we can turn into a day trader. And let me show you what happens. There's one of those circles around the tail with the potential to break. There's the pullback directly to support inside of triggers. This is what we talk about every day, guys. This is the best of the best. Even with momentum, absolutely no trades into support. If you did it, that was an avoidable loser. Even with momentum, absolutely no trades into Fibonacci resistance. If you took that trade, that was an avoidable loser. 3 triggers through. Loss of momentum makes it difficult. Second loss of momentum makes it almost impossible. And man, look at how long they went sideways there. Before 3 losses of momentum in the same time frame, in the same price range, created that giant push up. Pretty cool, right? So guys, everything is patterns. Everything is patterns. Large chart leads the way, momentum, potential to break. Look at all of the price action inside of that one bar. Small chart's nothing but a refinement tool. So that is NinjaTrader. TradingView is the other platform that we use, guys. TradingView uses not Renko bars, but minute bars. 15-minute large time frame, 1-minute small time frame. There is a plan. And the 15-minute is your roadmap to key targets, looking for termination conditions. You'll see that the indicators look just like on NinjaTrader, guys. You have a mid-band, you have one-to-ones, there's divergence, there's trigger lines, all the same things. The only difference is that on TradingView, for now, we're using supply and demand zones. These come from a third-party people, and this supply and demand will behave the same way Fibonacci support and resistance do. You can see price reaches, and there's your bounce. We're doing the same idea on termination conditions. Don't trade into areas that could stop the market. The plan is a little bit different because it's 15-minute, because it's so slow. So when we look to the large chart to define momentum, let me show you exactly what we're looking for, guys. And I'm going to drop this in the room for my TradingView people. You're going to ask yourself, what direction is the market going, guys? It's red. The market's going down. It's the easiest lesson you'll ever get. But then you have to ask yourself, what direction are my small triggers going? Because this is a slow chart, guys. This chart takes a long time to percolate and brew that coffee. So my small triggers are going down. And now we're going to ask ourselves, where are the price bars in relation to those small triggers, guys? If you are left of the small triggers, you're on the strong side. Shorts are easy. Don't fight the smalls on the 1 minute, but this is your best look. This would be your odds favorable momentum. If they're inside of the triggers, price is inside of the triggers, guys, you're still looking for shorts, but you're going to manage a little more assertively. If you are on the weak side of the triggers, this is where it's so important to make sure everything agrees with the trade. Don't put yourself in the place for a fight. And then finally, once you establish this, just ask yourself, is there anything in the way to stop my good time? So looking at the large chart now, this is the NASDAQ. Let's do a quick read together. Trend is down. We actually have strong triggers down. Smalls are down. And price is on the strong side of the small triggers. Everything on this chart says, let's go find a way to go short. Your 1 minute chart is where entries come from. And guys, you just can't trade directly into something that could stop the market. So in order to get on with the large chart, we either need to break below this area and look for an opportunity with momentum, or we need to pull up to a mid-band and maybe look for a trend trade to get in and get on board. And when you look at your TV trading plan, it tells you where entries are taken from. And there's checklists how to get into the market for these trades. So you can police yourself each and every time. When you look at, whoops, wrong one, the KISS plan. This is your NinjaTrader, guys. Where you're defining your rules, getting your entry, even giving you management, how to get in, how to get out, how to have the highest chance of success. So we're going to spend the rest of the day, guys, talking about momentum path and entry. We're going to spend the rest of the day saying, okay, even though the large chart says down, the small chart says don't do it. And if we go to crude oil, the trend is up. The smalls are up. We're on the good side of the smalls, and there's absolutely nothing in the way. And ladies and gentlemen, when you get this pullback right to the zone, a close on the correct side of the triggers is a fantastic way to go with that trend, to go with that momentum until you hit something solid. So what time is it? 9:38. Let's click on some charts, but let's do the live chart read first. I've got smalls above the large. The large are beginning to open. I have not touched those yellow 1-to-1s, and all of my triggers are above support. And just for poops and giggles, it pulled right back to support, right inside of the retracement zone before it started back up. Pretty cool. That, ladies and gentlemen, is your pattern. Even with odds favorable momentum directly into yellow 1-to-1s, none of the triggers broke. Now the market's heading up. I do have momentum, but I am directly into Fibonacci resistance. My job is to say, you know what? Let me wait for the triggers to get above. Let me make sure that the potential is there. If the potential is there, I can look for an area inside of triggers. And guys, I can already see my triggers. I can already see my areas inside of triggers. I just need the potential to break. And then I'll start looking for entries. In this classroom, I am not afraid to take trades live. They are all on simulator. They are not telling you to market. This classroom is an educational room. This classroom is not a trade calling room. It is a not telling you to do stuff room. I do not give trading advice. But if I have strong triggers, no terminations in an area for entry, I'll pull the trigger live. And I will manage it per the management plan. If the area only has the potential to break, we call it a 50-50 trade. If my checklist is met, I will pull the trigger live in class and we will manage it like a 50-50 trade. The same is true on TradingView. If the rules are met for entry, I'll take an entry. We'll manage it. You guys see how now price has come back inside of the problem area? We're above trouble. I can't trade directly into trouble. Guys, this is one of the things that happens on a 15-minute chart. They tried to break it and could not. They tried to break it here, could not. You see the tail went down. They couldn't get below. The tail went down. They couldn't get below. The tail went way down. And now they're right inside of it, guys. You have to believe somebody knows about this area. You have to believe somebody doesn't want it to go down any further than that. So if I look for an entry to go with the trend, it can't be directly into that area. Does that make sense? Which means this trend trade is kind of off the table, depending on your plan. So I'm going to scroll up to the top of the room and we're going to take a look at some charts, guys. Every chart presented is momentum, path, and entry. I don't care what platform you're on. We're going to talk about the good. We're going to talk about the bad. We're going to talk about how to do it better if there's a way to do it better. So Paul, you're doing some historical study. And guys, I'm going to tell you right now, it's a little more difficult to do historical study on a smaller on these charts because of the bar structure. So Paul says, here's my clear path, below to above, right? He's going, this is where I'm looking to take advantage of the short. There was your trend trade, Paul. Absolutely perfect. And then you have so much room down to 60 that you say, what a great place for an exit. Really nicely done. The only challenge is that you got into the perfect trend trade and then you reach the area and you can see the bounces. Would be okay to take profits there and then look for your next opportunity down to trouble. Really well done, Paul. Good chart read. Great study material. Stayed in due to odds favorable momentum on the 15-minute. So everything is up. Smalls are up. Strong side of the smalls. You get in. It's hard to read, Paul, because it's so small. You get in. It looks like strong triggers and a pullback to an HVA line, maybe a mid-band. And that's a big gutsy hold. Big gutsy hold. So Paul, would you really, and tell me, you don't have to worry about it, would you really take a trade directly into the bottom of a zone? Because that's where your entry is, directly into the bottom of a zone. Would you really hold a trade directly into 66.20 where the market bounces and comes back? Would you really hold it into that zone that pushes all the way back? Would you really hold it into all of these zones, this mid-band, this VWAP, with all of these problems going on all the way up there? So one of the things, guys, when you go do historical study, don't convince yourself that you're such a badass that the rules don't apply. Go back and break these down a little bit, right? Because, Paul, there is no reason to go long here. You're in a downtrend, you're below everything, you're outside of the outer band, but historically, you're a rock star. There's your first advantage, breaking above and pulling back, breaking above, pulling back to the zone. There's your first long trade at 80, making $300 a contract up to trouble, waiting for the break, and then finding the way for more. Does that make sense, Paul? Historical study's hard on these minute bars. It really is. Didn't take this HVA due to the 15-minute chart. So chart is down. Odds favorable momentum. Smalls are screaming. There's no long trade. And Paul, that's not an HVA line. That's a divergence low. But there is no long trade. Do you see how this is down strong, nothing in the way? If you try to go long against this, Paul, that's the recipe for financial suicide. You may get little fluctuations, but your trade, Paul, is the pullback to the zone with a close on the correct side of the triggers to go with those 15-minute advantages. Does that make sense? It's fun to try to fight, and historically, it looks like the fight is good, but man, fighting momentum is a tough look. Exhibit A. Strong triggers, clear path, pulls right back to the HVA and the 1-to-1s. It looks like you go short. And then when you get to the zone, Paul, I like this because they try to break it and get below. And at this point, let's talk management real quick. And this is kind of the picture that I sent you. Guys, this is a good idea. So Paul gets in going with the large chart, and it breaks through everything, right? So Paul, if they pull back right here, I'm not sure it's where your stop was. I can't see the price ranges. If they get to the other side of that zone that should stop everything, that's a great management opportunity. And I think I took a picture of that yesterday. If it's really going to go up with the large chart, that zone is my line in the sand. And one of the things that you'll find on these minute charts, guys, is that's it. There's your momentum trade long. And until they get back below this zone, that trade is working. Good stuff, Paul. Great study. Great study. Nicely done. So that's a little trading view lessons this morning. Let's go and take a look at a little something happening on Renko bars. So Pibbies, once again, pain in your ass, my friend. If you're going to post, do me a favor. Show me 2 charts. I don't know what's going on the large chart. I know you had all the resistance right here, and you tried to jump in, didn't work, and then it turns into the trend trade, and you go full rock star, take your profits, then it pulls back to the area inside of triggers, and you're on your way again. And that's about all I can tell. That's the only one I think that maybe they got you on, right? Because the small triggers didn't break through. You can't have that momentum trade. Great heads up letting it turn into a trend trade. And then beautiful, get paid, Let it turn into another trend trade. Awesome job, Pibbies. It's easier with two charts. It's easier with two charts. So that we can take a look at those large chart advantages. All right, Pete. You lost the back chart. Uh-oh. Did you find it since? Or do you need to rebuild a chart? I can help with that. This is awesome here. Okay, so you lost your large chart. No worries. Two ways you can do it. So let's get you fixed so you can trade effectively today. The easiest way, Pibbies, is just follow along with me here. On the workspace, go New and go Chart. Pick your instrument. And over here, make sure that it says 13.2 Renko. 13.2. And I'll give you the picture. So New, Chart. Those are your settings for a large chart. If you want to build a new one, get back in the game, have those advantages. If you struggle with it, it's okay. Reach out to Jason. Let Jason take good care of you. But that'll get you a new chart if you guys ever close out your chart. All right. Pete has a termination that reverses the market. We call that a strong top. He has odds favorable momentum, 2 triggers through, and Pete misses the entry at the area inside of triggers, but he says, this is my trade and there's room to targets, gets in, and look what Pete does, guys. This is awesome. Pete says this big, ugly blue fib could stop the market. Let me get paid at it. And if it breaks through everything with momentum, I'll just jump right back in and get paid again. Really nicely done, Pete. Nice trade. And then once again, is it a strong trending market? Did you get 30? You've got weak triggers. Every trigger line is below resistance. And Pete says, I've got 30 bars in the same direction. So I'm going short with my clear path. And he doesn't jump in arbitrarily. What Pete does is he says, I'll get in on the way down and make money down to trouble. Nicely done, Pete. Call Jimmy. I'm not sure who Jimmy is. Jason? So Pibbies, just drop a Discord tech request. So anytime you guys have challenges, there's your link. Go put in a ticket. Follow that link, Pibby, and just put the ticket in. And then Jason will reach out to you and he'll get you squared away. And you'll be good. Yeah, tech is where it's at, man. Jason is the best tech guy you'll ever meet. The only things he can't fix are things that aren't broken. Pete, great trading this morning on those. Great awareness of trouble spots. Awesome job getting out and then finding a way once it breaks. Really solid. All right, Miss Jen. Absolutely had odds favorable momentum here. No, he cannot. A little bit of weakness. Every trigger below. Strong trending market. And Jen, you just jump in, right? Hoping for it to work out. And it does for a second. And then it dies. And then it pulls right back to resistance. 1-to-1s. Mid-band. Every trigger line is below, which means that this is an area likely to stop the market. You had a pretty aggressive hold. How did you pick that fib as a stop? You don't have to answer it. But why not this fib, right? Why not that fib? Why not? So, and it worked out. And here's the one thing, guys. I see a lot of people jumping in at the bottom and holding through the trend trade. And I just want you to see this, Jen. This entry, that's break even. That's wasted commissions, right? And I know this was an accident, but that entry is damn near break even. One of the things pullbacks do for you guys, and I know that you all love that jump in trade, right? And it might go. Is the $600 worth it? You hated the trade. It's okay. You had a lot to hide behind. You really did. You had a lot to hide behind. You have good lessons. But guys, if you're going to hold, and I'm using this one, Jen, just because it's pretty common. It's pretty common. And I think Pete's picture shows the same thing. So let me click on Pete's, because I think Pete's is at the exact same time. If you're going to hold this trade, right? If you're going to hold, and Pete just took an exit, so this is just good management for you guys. And I'm not saying don't, but I'm saying if you're going to hold from here, you're going to have to suffer every bit of that retracement because your stop belongs where the market shouldn't go. Does it make more sense in your trading plan? And this is up to you, right? This is up to you. To take an exit and find a re-entry. And I think that's one of the great lessons is that when you learn to trust a little bit, you know that if this one fails, it's probably going to turn into that. And a lot of times, guys, holding for those huge pullbacks, what if that's part of your 20 to 30%? How much money did you give away, right? How much money can you give away from holding for that giant retracement? And that's one of the beautiful things about what we do. The accuracy is awesome. And the need to hold and pray really goes away with what we do. All right, Miss Jen again. I love the annotations. Strong top, odds favorable, 3 triggers through, perfect entry right to the pullback inside of triggers, great stop placement. You got paid on the first one, went break even on the second one. Divergence did print based on a good entry. Happy with the risk. Beautiful job, Jen. Great trade. All right, before we get to the Steve Diego show, let's go see what our live market's telling us, guys. Good side of the strong, and the NASDAQ is directly into trouble. Crude oil, good side of the strong. The market pulls back to the mid-band in the zone. There's your close on the correct side to take a trend trade with the large chart. Let's go take a look here. Odds favorable. Man. Did anybody recognize that price reached that divergence high to the tick? And that's exactly where the market came crashing down. My new users in here, when we talk about areas that can stop the market, look at what happened right off a divergence high. And look at it still going down. If you took a loss, you took an avoidable loss. Does that make sense, everybody? Termination conditions for the win. Termination for the win. Terminations, terminations, terminations. It's a pain in the ass because termination conditions are what's going to keep you patient, guys. Termination conditions are going to be the thing that makes you mad that you're not in a trade. But there it is again. Big push down. That was your run to get up to it. Big push down right off the termination. Price gets back to Fibonacci support. All the triggers are above. There's your bounce up. We have defined where the market needs to clear. If you're new with me, guys, you're wondering what the hell I'm talking about. You're like, he's going too fast. I don't understand the language. This is where I encourage my new users. Keep it simple at first. Don't look for trades. Look for advantages. Don't look for the money. Look for the momentum first, right? Learn that separation between the triggers. This'll become apparent in a fraction of a second. And then learn your path. Learn that recipe. Did price reach an area? Where are my triggers? This'll take a second. You'll look at your large chart and you'll say, I have momentum, my path isn't clear. Boom. That's how long it takes to do it. You'll look at your large chart. I don't have momentum yet, but I've got a good run all the way down here. Let's watch this for a second. If my large triggers roll and get below that fib, I can already see where areas inside of triggers may be. But I don't have it yet. I need 4 lines under. I need my large triggers to roll to create that momentum look. Because remember the rule, if the colors don't match, you don't have strong triggers yet. That very basic, that very simple is keeping you calm, keeping you patient. So I'm going to leave you guys with the S&P for a minute. I'm going to mute the room. I'm going to walk away for 5 minutes, go stretch my legs. When I come back, we're going to look at more charts. We're going to look at the live market. If we can get rules met, outstanding, we'll pull the trigger. If you have questions, please post them in the room. If you have comments that need attention, please post them in the room. Otherwise, when we come back, I will be starting with Steve Diego's list, and we'll be doing a little bit of momentum path and entry analysis. Back in about 5, guys. Get back at it. Man, a lot of movement since I left, huh? I guess termination conditions work. So those of you that are newer with me, hey Dip, I didn't see you sneak in. Nice to have you. Eric, TK, Dip, all you guys that are new, learning to trust. This is one of the greatest things you can ever learn in this room, is that these lines can stop the market, and it's okay to not trade into them. This is your patience piece, guys. 90% of your day doing a whole lot of nothing. Price reaches, 1-to-1, support, none of the triggers break. And sure enough, there's a big ugly bounce. It's crazy how often this works out. Anybody catch that one when it finally rolled? Pulled back? Sounds good. I'm just glad you came back. I like it when you guys come back. Termination condition for the win. Once again, ladies and gentlemen, I can't stress enough how important it is to learn that rule. All right. Steve Diego. 1, 2, 3, 4, 5, 6, 7, 8, 9. Oh my gosh. Mark, is he allowed to post 9 pictures? You are darn right he is. It's encouraged to post 9 pictures. It's encouraged to post 20 pictures. 1, 2, 3, 4, 5, 6, 7, 8, 9. Guys, the record is 77. 77 annotated charts posted in a room. You can't post too much. It's impossible. I run my own business. I can stay as late as I need to if you need help. So guys, don't be shy with that. Let's see what we have. Momentum on the 836, bullish engulfing. I don't know what that means here because these are Rinko. I'm not sure how they can engulf. Oh, you're talking about an entirely different platform, but you're showing it to me on this platform. So Steve Diego, if you're going to identify advantages from a different platform, different chart set, let me see it. My imagination is too crazy to picture your description. So what I see is momentum directly into a termination, the same termination that's held 3 times. You choose to enter because your small chart has momentum and you get paid. Outstanding. I guess momentum for the win on that one. I'm not sure how to read that. Directly into a termination. Not momentum, but clear path. Small's on the wrong side of the large to call it momentum. You take a pull back and you get in at an area outside of triggers. So you grabbed a couple ticks. Nice job. Recognize that you're in on the wrong side of the triggers. So guys, when we talk about trigger lines, here's a good little break for a lesson. One of the reasons we learn the high probability trend trade first is because pull back to an area inside of triggers. Pull back to an area inside of triggers. Trigger lines define the retracement zone. Areas inside of triggers define the bounce zone. Guys, your initial stops in the KISS plan are placed 4 to 5 ticks beyond the triggers, because once you get below the triggers for a long trade, once you get above the triggers for a short trade, you don't know if, when, or where that market is going to continue down. So initial stops are typically placed there. Steve says, oh my gosh, I'm already where the market shouldn't go. I'm not going to sit and hope. And you took a couple ticks. Nice job, Steve. 2 triggers through, odds favorable momentum, divergence prints, which is one of the biggest killers, in at the area inside of triggers, didn't realize 2 minutes until open, so you exited the trade, and it looks like it may have saved you by exiting the trade. 2 triggers through with divergence, right? So this typically creates that big push. I'm glad you came out all right. Mid-band is the term. Strong top. Going down, trading directly into support. You try to take the momentum trade. And then you exit, and then you re-enter. And you make money on the way down. Looks like you're directly into terminations with weakening triggers. I'm glad it worked out, Steve. A lot of forgot about 10 o'clock news, didn't realize I was missing. Guys, remember, this is your livelihood. Give it your undivided. Give it your undivided. Odds favorable momentum with 3 triggers through. You try to jump into the momentum trade with weak triggers. No momentum trade with trigger lines inside a large. Amen. And it does turn into the trend trade with this look, and you're able to get paid. 2 off. You can feel the anxiety a little bit, right? You can feel the anxious, Steve. You can see the anxious. That's okay. Deep breath. Deep breath. You're good at this. Strong trending market. Everything is clear. And just jump in and make some money. Nicely done. Odds favorable. Room to the target. You take the Nexgen momentum trade. Small triggers break through. Price snaps back to the fib. Continues right down to the fib. That's the trade, Steve. That's the Steve I know and love. Beautiful, beautiful momentum trade. Odds favorable. Clear path. Not a clear path, Steve. Remember, guys, if you pull your fibs off of your large chart because you don't want to crash NinjaTrader, if you pull your fibs off of your large chart because you don't want to see them here, guys, you gotta believe that the fib from your 1 minute belongs there. Just because you pulled it off doesn't mean that it doesn't exist. Your fibs, guys. So for newer users, your workspaces have 3 time frames worth of fibs. There's the 5-1 chart. That's your entry chart. It'll be skinny and it won't extend all the way to the price. There's a big fat one. It's a 21. It doesn't extend all the way to the right. That's a 21.3. That's a higher time frame than your big chart. And then you have your 13.2 fibs, and those extend all the way out. And guys, these are put on your large chart for a reason. It's not just to cloud things up or make us look smart. Your 21 stopped it. Your 1-to-1s stopped it. Your divergence low stopped it. My gosh, it made a bounce there. The 13.2 stopped it. The 5-1 stopped it. Guys, each and every one of these areas is vital to giving you the highest chance of success. So if you take it off of the chart, guys, it's still there. And you can see it's there, right? And smalls are working inside. And it's not a momentum trade without momentum. And then it turns into the trend trade directly into a termination. And it pushes lower. And I'm glad that you held it. But you took a momentum trade that wasn't, right? The add-on doesn't make sense. The trend trade is iffy at best. Divergence on the 50-50. And man, you dodged a bullet. Over $1,000. Need to accept the loss after momentum trade fails and re-enter on the high probability. And guys, this is, and Steve, we are going to celebrate like it's 1999. Steve went back and he said, let me think about what I just did and let me see if I can do it better. And this is how successful traders are built. Steve Diego, very high risk with 3 entries. The drawdown was 1,060. Need to accept the loss up here and re-enter down here. And Jen and everybody else in the room, this is what we were talking about. You don't have to sit through $700 a drawdown. The next trade is always coming. It's always coming. I have yet to see a market flatline. Termination reverses the market. Where are we getting in? Over here. Okay. Odds favorable momentum. Nothing in the way. You jump in on the momentum. And then just another shining example, guys, of why if you see a fib on your small chart, you have to believe it's on your large chart. Look at the bounce and the reversal, and it looks like there's nothing in the way here. Steve, great trading. You definitely calmed down after a little bit. Maybe you were trying to make something happen before the weekend on Friday, but Mondays and today's, absolutely beautiful, beautiful trading. Nicely done. Hunter, the trade's so nice, we want to see it twice. Odds favorable, 3 triggers, no divergence, perfect entry. Let's get paid. Get out, break even when things change. Nicely done, Hunter. All right, let's see what Paul did. Was focused on the HVA and 15 lost. So let's see where you entered. You went short at the HVA at 34. Triggers down, strong down. So, all right, Paul, are you with me in here? Cool. So pullbacks to the HVAs, trading view people. If I have, I'm locking it up. If I have strong triggers, Paul, odds favorable momentum on the 1 minute, that's when we're pulling back and just selling this HVA. Does that make sense? It's a momentum style entry. When you're going already with an established trend, that's where it comes from. And then your 1 minute chart is going to say, hey, Paul, check it out. Those small triggers are coming up. The large triggers are rolling. I want you to bypass this HVA. I want you to skip that HVA and force them to push a little bit higher and then give you a close on the correct side of those small triggers. So once things change on that 1 minute, Paul, you expect that little deeper push. Those momentum trades, just selling an HVA, it's imperative. Let's see if we can find an example. There we go. Odds favorable momentum. Smalls above the large. Buy the hell out of that HVA, Paul. Does that make sense? That's your momentum trade right there. And it's dependent on the 1 minute's triggers. I like your thought process. Following the large chart, doing what the large chart's saying. Your 1 minute just told you to pump the brakes and be a little patient. Nicely done, Paul. You seem to be coming into your own with TradingView pretty quick. All right, Cav. Cav says, check it out, guys. Termination reverses the market, gives him all the momentum he could ever hope for, and Cav catches it off the bottom. Pull back to the mid-band, right above the retracement zone, and gets out of trouble. Nicely done, Cav. I want to show you guys what Cav did here. 2 things. 1, guys, I love it when you brag. Don't ever stop bragging. There's a lot of money to be made with this software, right? And that's what that is. I see what you're doing, Cav. But check it out. There's a termination, and it's the second hit on the termination. Everything rolls on the small chart. And Cav, correct me if I'm wrong. Cav says, you know what? Price may retrace to these trigger lines. Well, this mid-band is on the way to the retracement zone. It's my right to enter there. I know where my stop goes. I love everything about this trade. First, it's a termination. Everything rolls. Momentum is strong, and you catch it beautifully. Nicely done, Cav. It's hard to not be happy about momentum and room to targets. I can't stress that enough. All right, Victor says, hope you can use this picture. I know it's small on the 5-1 since you had to fit 4 trades from the 13-2. You know what's cool, Victor? Is you're allowed to take 4 pictures. You don't have to put them all in one. So let me see what you did here. Momentum, 2 triggers through. You take, it looks like, I'm trying to figure. You tried a short trade that I can't see. Golly, Victor. 818. So this isn't on the large chart. I have no idea what's going on there. But it looks like you went long at one point, pull back, mid-band, inside of triggers, and took it to resistance. Love it. 2 triggers through, no divergence, strong everywhere. Pull back to support, rode it to resistance. All right, first one's in, Victor. Great job. And then the area holds, and everything rolls. And you said that's second profit target from moving away from the computer. I don't know what that means. Oh my gosh, you didn't get paid at all that trouble. You held it and gave it all back. I see what that means. Why would you get away from your computer with live money on the market? You don't have to answer that, but guys, this is your job, right? Even Homer Simpson doesn't walk away from the nuclear reactor. Victor, this is your livelihood. You called that exit. Perfect. And then you gave 80% of your trade back. And then you get 2 triggers through, 2 triggers not through, no divergence, perfect entry. It looks like you made money. And then even with divergence and large triggers rolling, you decide to go short again, and you pulled one off on them, right? 2 triggers through, divergences, large triggers. Yeah, but Victor, you made money on all of them. That's awesome. Congratulations. Let me ask you, Victor, because I think you could teach this class with your ability to read the indicators. With the large triggers up, with divergence, with 2 triggers through 2 areas, do you feel like that was a skillful, repeatable, win more than it loses trade? Or did you get lucky on that one? What do you think? You have every trigger line above trouble on your small chart. So I want you guys to recognize this. And Victor, I'm not trying to bust your chops. When you go back and look at this trade, your brain, and you typed it in the room, I made money. I must be a trading god, right? And we'll do it lower cases to not be disrespectful. What you really need to post is this one. I got away with one. Maybe not my best look, because there's so many things going wrong with it. And your brain believes that you're infallible if you get paid, guys. And this is what we call short-term victories that very often produce long-term failures. This one was the easy money. This one was the easy money. This one was the man, I got lucky, right? And Victor, I told Jen the same thing this morning. I love it when we get lucky, because there's times when we take the perfect trades and they don't work, and that's probably a little karmic retribution. Great trading though, Victor. Great trading in there. Nicely done. All right, Hunter. Odds favorable, nothing in the way. Pull back to an area inside of triggers. Make that money. Out break even. Nicely done. Nicely done. Momentum and path. Pull back to an area inside of triggers. Make $100. Out break even. Just outstanding. What did that end up looking like? That's crude. Where was that trade? So that trade was right here. I had a fib. I'm just wondering if it ever got outside of where it shouldn't, because you had a clear path, right? Yeah, see how it stayed in the range, Hunter? So one of the things, Hunter, that I say every day, and I think you're probably getting close to that point. So the KISS management plan is designed to help you understand stop placement, and it's designed to help you learn how to get paid as a brand new user. You will craft a plan tailored to your personal goals based on your experience reading the indicators. And Hunter, I think that you are working towards that right now. Because let me show you. On your trade, you didn't have the fib. So it's a different look. So you enter and you get paid. And Hunter, you've already got $100 in the account, right? Is it worth risking 80 or 90? So you don't lose no matter what. With odds favorable momentum and nothing in the way on your chart, is it worth risking 80 or $90 because it's a high probability scenario, because it is the best of the best look you could ever have to get up to trouble? And that is where, Hunter, you're going to start making more money. That's where these break evens become, I'm willing to leave a little bit of risk on the trade because of the large chart conditions. Does that make sense? And you don't have to. Guys, you don't ever have to go outside, but this is one of the things that happens. Because, Hunter, does it make sense to put a stop at an area inside of triggers when you have odds favorable momentum and a clear path? And that's kind of how management grows. And I just wanted to bring that out there because you are excelling and you're learning rapidly and you're really moving forward fast. And eventually your management probably will change a little bit. All right, 8 ticks. Look at those hollow bars. That's cool looking. I haven't seen that trick. Let's see what you did. Took this trade based on the look of the large chart. So the large chart had strong triggers, but it retraced. Where did you get in? Let me see where you're in. Hold on. 722, 722. So you're in right here. Smalls are down. Large are down. You've got room to trouble. And the small chart pulls right back to the mid band, and you didn't take it there, but when it pulls back the second time, you're able to get it, and you're out at 65.50. Hold on. So it's this trade right here, coming off the termination, all the triggers down. You wait for everything to agree to take your entry. All right, I like it. I like it, 8 ticks. Do you see how 8 ticks isn't enough? I told you we're going to turn you into 20 ticks. We're going to change your name. With everything pointed down at this point, with room to trouble, that becomes your expectation. And I love, dude, you take $100 a pop, you'll never starve. But opportunity to hold a little bit longer. Nicely done, 8 ticks. Good to see you posting. I like it when you guys post in here. And then 8 ticks, are you with me in here? Can I make a request? And this is just me being me. When you talk about based on the look of the large chart, what is it about the large chart? So one of the things that I say every day, and guys, nobody's ever under obligation to do it, Make it repeatable through annotation. So what was it about the large chart that you really liked, right? What was it? Was it the termination and the small triggers never got above? Was it room to get down to the next area? And what you'll find is that annotations make it repeatable. So something to think about. Nobody's ever obligated, guys. I can read your charts. The annotation is for you guys 100%. 100%. Oh, here we go. I think this is the same picture, right? Fib holds. Large triggers down on both charts. There's a clear path on the large chart. There it is right there. Dag nabbit, 8 ticks. You got it. Clear path, fib holds, everything down, take the entry, make money. Absolutely beautiful. So you did it. You did exactly what I just asked. I just had to click on the next picture, huh? Nicely done, 8 ticks. Great chart reading. Great chart reading. Let's see, who's next? So we saw, oh, that's why it is, because that was 2 pictures. I only saw it as 1 picture. My bad. All right, Andy V. And yours is 2 pictures as well. All right, so your first picture, momentum, 3 triggers through. There it is. Entry was 66, 63. Okay, we got those weird things, right? Perfect entry. And hopefully it made your targets. What a great look. And it sure enough did. Right to where you said it was going. So ignore his entry markers. Odds favorable. 3 triggers through. Perfect pullback. Directly to resistance inside of triggers. Man, Andy, with your great entry, you're up 240 bucks before you ever even hit your first target. That's outstanding. This is, guys, this is faith in the plan. When everything's perfect, look at his targets. 1 to get paid at the first potential trouble spot. 1 to get paid at Fibonacci that could stop the market. And just outstanding, Andy V. Nicely done. Nicely done. And it looks like we have another one. Whoops. Strong top, all the momentum, 3 triggers through. Miss the first one, catch the second one, and get paid. Nicely done. And Andy, they look exactly the same. They look exactly the same. I'm going to let you guys in on a secret. The most successful traders that I ever work with are doing the same thing day in and day out. The same trades day in and day out. The same advantages day in and day out because they know that it works. Chariot, strong bottom, odds favorable. Got in really late but waited for a pullback, had momentum, put in a tight stop. When small triggers turned, I got out. All right. So you get in right at the mid-band inside of triggers. Actually, it's right on time. Chariot, they just came back for you. They do the first one, and they're like, oh, crap, Chariot's not here. Let's come back. No, 8 ticks, you're good. They're like, we forgot Chariot. And what a great entry. Now, Chariot, what about those little small triggers rolling scared you? And it's okay. Get paid, right? I'm going to show you a picture real quick. And I want you to see something. And I'm glad that you posted that on there. I really am, because what you did is really common. But check this out. So I'm just going to go through entry pictures real quick. The perfect trend trade, guys. The small triggers turn against it. It happens almost every time. The perfect trend trade, and the small triggers turn against it. The perfect trend trade and the small triggers turned against it. The perfect trade and the smalls turned against it again and again and again and again. And the reason I'm showing you this, Chariot, is because momentum is defined on the large chart. The 5-1, ladies and gentlemen, has so many fluctuations on it. The 5-1 has so many ups and downs that when the momentum is perfect here, as it is, right? And there's your pullback, and those small triggers started to roll. So you'll see that a lot. Remember that it's the large chart that leads the way. Remember that it's that big, slow-moving chart that's giving you these advantages. And what you'll find is that you won't let the small chart talk you out of as many trades. Great stuff, though. Great trade, Chariot. Beautiful, beautiful entry. You damn near bought the low tick. Nicely done. Thank you for sharing that. And guys, it's a good lesson. The small chart will scare the heck out of you if you focus on it. All right, Paul. HVA long, difficulty getting limit long filled. You had 4 contracts by the time finished clicking limit orders. Small triggers below large triggers cause hesitancy, staying in, pulled stop up, stopped out, plus 12, 3 per contract. Okay, so zone reached 65.39. That's not it. It was right here. So your zone was reached. Goodness, Paul, this is beautiful. And you guys see how they tried to break it, but they couldn't? And when Paul gets back in, he's back on the good side of the zone. Paul, this is a great read because at your entrance, smalls are up, large are up, you're above trouble. That termination reversed the market. And the HVA rules say, buy a pullback to the HVA. And you did. And you rode it all the way up to trouble. Paul, this is a beautiful, beautiful trade. The entry was 45, not 48. So there's $30 there per contract. That's 120 more. And the exit was really 59, not 51. So perfect look, Paul. You'll learn to trust entering at that line. You'll learn to trust exiting at that zone. And just being willing to, because the next trade is coming. Great, great look. Andy Man. No, 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 no. I do that every time. Do you really have strong momentum up, Andy? With the small triggers down? Maybe not. And I don't know. You do have strong triggers over here. Smalls are down. Wrong side of the smalls, coming from a termination, but the 1 minute chart says up. So you jump in directly into a zone and get out at 1-to-1s. And that is so hard to read, right? My large chart read is I'm coming from a termination. It made my small triggers roll. 75. And you are in the transition phase of the small triggers down in an uptrend, which means the 1 minute chart has to be perfect. And you had, I'm assuming, odds favorable momentum. Andy, that's so hard to read. And I'm glad that you made your profits. Uptrend, weak sided down smalls, make the 1 minute chart be strong, and it was. And you managed to pull one off. All right, let's see where we did this one, 8 ticks. 8:59, so we're right here. We are termination held. I know you like those fibs holding. I do too. What a great look. Smalls are down crazy strong, below the large, which are turning. 2 positions, mainly because of momentum. The first one is a little early. The second one is rock star perfect. And you took 8 ticks on them. Your name is good, 8 ticks. Perfect entry. Absolutely no reason to exit. at 8 ticks, but that's okay. It's nice to get paid, right? And that one looks like it happened so fast you didn't have time to do anything anyway. So let me give you a cool lesson on these small triggers. And we'll use yours as a picture. Yeah, I can see the timestamps. So one of the things, I know that you're using that small chart. And for all you guys that are using the small chart, do you see those small triggers down? And I'll put this over here. See how the small triggers are down? See how the small triggers are down? Once you get a close on the other side of those small triggers, this is where the momentum is this is where the immediate momentum is lost with a close on the wrong side. And does everybody understand when I say wrong side, I mean above the small triggers, wrong one. When I say the wrong side, I mean once you get a close above those small triggers, your momentum advantage is gone. But here's the cooler, more awesome part of that one 8 ticks. Is until you get a close on the other side of those triggers, that market's going down. And let me show you exactly what I mean. Until I get a close on the other side of those triggers, the market's going down. Until I get a close on the other side of those triggers, the market's going up. Pretty cool, right? So you're going to see this a lot. When it's time to hold, if I'm in right here, I can say, I'm in the perfect trade. Life is good. Everything is awesome. And this market's not going to stop until it gets a close on the other side of these triggers. And that is a fantastic way to turn 8 ticks into 80 ticks. So we're watching it right now, right? So guys, this is not a trade. I'm going to sell the market, and I'm just going to put my stop on the reversal bar marker. And this market will continue down until they close on the other side of the triggers. And it doesn't mean that it's going to reverse there. We did this one day just for grins. And it was like a $700 trade. So that was it right there, Samuel. When I say a close on the other side of the triggers, and that was a pretty quick example of it working, right? Which is why you don't just jump in. Right there. Whoops, man, I keep doing that. Boom, 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 boom. So when I say a close on the other side of the triggers, do you see how that remained a down bar and that remained a down bar? So it takes a reversal bar, and the close means that it made an up bar. So when I say a close on the other side of the triggers, the translation is a reversal bar that finishes above the small triggers. Or going the other direction, a reversal bar that finishes below the small triggers. Does that make sense? I used this when I was trading NASDAQ on Renko charts because there's times where the NASDAQ absolutely runs. And I would take my NASDAQ short, right? And I would just say, okay, this fib could stop the market, but if I don't get a reversal bar that finishes above the triggers, I'm going to hold it for a bigger move. And I would say that, and sometimes you find that it breaks and it breaks, and it's a great way to get a little extra out of a trade instead of, like, maybe my first contract comes off at the fib and my second contract becomes a runner and I've just got that target, who knows where, down at the next fib. But if that happens, I'll exit and look for the next trade. And that's a great example. It went down until it got a close on the other side of the triggers. And guys, that was not a trade. Please understand, there are lessons that come into play that are not, they don't have anything to do with trades, guys. They don't have anything to do with anything more than a visual lesson, so that you guys can see it. So good stuff. Good stuff. And you had momentum. 4 triggers had gotten through, but you didn't have an area inside of triggers over here. Do you guys see that? That's where entering with a reversal bar helps out a little bit. 2 triggers through. Divergence prints. So the potential to break is most often killed by divergence on the small chart. I want you guys to know that. That's what the KISS plan says. Is that 2 triggers through is iffy already. You have momentum, but it's only 2 triggers through 74. It's only 2 triggers through 69. And you're already losing momentum on the small chart, which is giving you a little heads up that there are definitely sellers fighting, and it makes that fib less likely to break. You guys are awesome. Killing it this morning, guys. Killing it. All right, Pablo. Let's see what you did. All down. Nothing in the way. Strong triggers. You're in at 07. Is that right? Or were you in at 15? It's hard to tell here. So you traded directly into the zone, and it looks like it got you. And then with strong triggers and the pullback, you get back in below the zone at 16, just below it. And you take that one all the way down to trouble below. Nicely done, Pablo. Remember, guys, you were in at 07. So from 07 to, what is that, like 08? There's just nowhere to go. Does that make sense, Pablo? But if you had gotten in at 19, strong triggers, pull back to the zone, do you see how 19, 20, that's your entry with virtually no risk and room to get back to trouble spots? 07, it's already made it to the next trouble spot, and then it bounces back, and then it gives you room. And the second one is Rockstar. Does that make sense, Pablo? Awesome. You were trying to do, it peeked its head from underneath the zone. Let me see if I can get it down to the next zone. But we want room to make money. I'm glad you made your money back. Good job. Good job. 8 ticks. Dun, dun, dun. Strong Terminationville, population U. But because of the momentum, you take the perfect entry and you manage out before you get back to trouble. Medium probability. Do you see it? You've got momentum, but you don't have a clear path. You've got the perfect low risk entry, and you manage it assertively in case support decides to hold. And that's all I ever ask, guys. I won't tell you that trading into a termination condition is bad. I just won't do it. That's not my job. My job is to make sure, is to make sure that you realize that you're trading into trouble. Great entries create manageable trades. And I mean, in $600 before it ever retested trouble. I love this trade. Nicely done. Miss Jen, talk to me. Here we go. 4 triggers through. Small triggers are working their way back. Divergence prints. Just not feeling it, huh? Weak triggers, weak triggers. I like it. Due to the loss of momentum, chose not to take the next trade. And what happened with the loss of momentum, guys? It pushed higher. And it might still push lower, but because there's nothing giving it that freight train, that ferocity going down, that's where bigger retracements happen. Nicely done, Jen. Great recognition. Way to pump the brakes on that one. Andy Man, momentum down, past trouble. Everything says down. You sell the pullback to the 1-to-1s. Beautiful. Room to your targets. Nicely done. Kind of panicked when I added on another lot when I meant to take off one on the profit. We've all done that, Andy. We have all done that. Great trade, though. Everything says go, strength, pull back, sell the area, giving you room down. Really nicely done. And then, Andy, you said you keep doing the same rookie mistake, confusing sell for buy, vice versa when you're going short. It's opposite of normal today. It worked out okay because you added on and it kept going down. So, Andy, when you sell, are you putting your profit targets in, or are you just clicking a button to get out? Because one of the things people don't realize is you can just click a button to get out. So if I take, which way is the market going so I have a better chance? Ooh, I got backed up, right? So if I sell 2 and my profit target is down here, and my stop's up here, guys, not a real trade. Andy, I can change this to 1, and if I hit buy, it'll pull 1 off and change everything for me. You just hit the wrong direction. I've done it. But that's one of the ways you can do partials without having to put a limit order in, is just click that buy or sell button. And guys, right now, everything says up, but there's nowhere to go. That's what crude oil is saying. Bum, bum, bum. NASDAQ, everything says down. You got a little bit of room before the zone. What's your smaller chart say? What's your 1 minute say? Whew, I got backed up, didn't I? 1 minute says we hit something solid. So if I were thinking, I really want to go short before the large chart hits that zone on the large chart because it's below this one, I would love to see a pullback to a zone, something solid. And if my small triggers turn against me, I have to change my thinking to something a little higher up. But as long as I have momentum, this gives me room back to trouble. Two triggers through, 1 divergence, and it gave a little bounce. And now we're looking to see what happens. Guys, we are officially strong trending market. Guys, remember, 30 bars in the same direction. Absolutely nothing in the way. The consensus on this look is as long as it's not into a termination condition, sell the midband until it stops working. And here's the deal. It will stop working eventually. You will take a loser in that strong trending market. But until that loser produces, when you have 30 plus bars in the same direction, when there's absolutely nothing in the way, just sell the midband till it stops working. That's your point. Do you guys see it? And the midband is on the wrong side of the triggers, which means stop placement has to be an arbitrary number. Or you can catch it on the way down. And it looks like the midband just stopped working. So now it turns into weak triggers, still a strong trending market, weak triggers. If I get a reversal bar, the strong trending market is over. If I get a down bar, it continues. So we're waiting for the small chart to tell us what the people in control want to do. The large chart has just been driving all morning. Oh, and there it goes. That reversal bar marker tells me when the trend is over. So we'll see what happens. All right, guys. Made it through the second hour. Good job. Are we learning anything today? How we feeling, newer people? Guys, there are lessons every day in this market. I can't stress that. There are things that you think you know that you're going to know better 30 days from now. There's things that you think you understand that you're going to understand better 30 days from now. And the key is just keep doing. Keep doing the same thing. Every time you go to a chart, ask yourself, do I have momentum? Is my path clear? Is there an area inside of favorable large triggers? Your reversal bar just killed your strong trending market. All I had to say is keep doing it until it doesn't work. Guys, it's done working. Weak triggers, loss of momentum, couple divergences, no areas inside of triggers. And there's your first trouble right there. Let's see if they get there. Miss Jen. 4 triggers through, strong trending market, sell the mid band, you catch it on the way down, get paid, get paid. This is absolutely beautiful, Jen. And exactly what we talked about. Strong trending market with nothing in the way, sell that mid band till it stops working. Paul, HVA rules for TV says shorts at the small triggers must have rolled below the large triggers. Long HVAs say that they must roll above the large triggers. What about triggers on the 15-minute? Do these charts follow 15-minute triggers to be opposed? So Paul, great question, and that does make sense. That's a great question. Let me show you exactly what we're talking about. Hold on one second. Being held hostage by a sneeze. All right, got it. So Paul, I'm going to go through, and this is fortuitous. The HVA rules. 15-minute zone reached. Smalls roll above large on 1 minute. Enter at the green HVA for the long, right? Yeah, Andy, I'm glad it is too. My apologies to everyone affected by that. So, zone reached, Paul. Smalls get above, there's your HVA line. So, do you see how the checklist is met? There's your shot. So, one of the things about these HVA trades, especially against a 15-minute chart, is you're fighting strong triggers. But 15 minutes is a long time, and this bar could go up 100 points. So we're using that refinement process saying because of this termination, I'm willing to take a shot. And the one thing in my personal plan, Paul, and I'm not telling you what to do, is I will take one shot. And I will realize that it's less likely to work against strong triggers, which means that even though the checklist is met, there's going to be times where I'm going to say, holy crap, this is way too strong. I'm not comfortable with it. But if you took it, you already got your reversal bar up. You probably have 2 ticks of risk on this trade, maybe. And we'll see what it does. So do you see how you're fighting strength? But the recipe is solid. If you were in at 55, you had 9 points to reach the zone. Probably break even at this point, probably already made money. If it goes up, it's free money. If it comes back down, nothing to lose. Does that make sense, Paul? Did that answer your question? Because we're looking at the perfect HVA trade right now. First it's the zone, then it's the roll, Because of the momentum down, for me, it's a one-shot endeavor, but it's still going, guys. The entry was 56. 86 is, holy smokes, 30 ticks. That's a lot of money. It is. But remember that the 15 minutes are huge. Isn't the large chart into a term, though, and not through for a long? Long is up, right, Jen? So do you see how it reached the zone? Large chart reached trouble. Oh, we did. So the large chart reached trouble. This is your HVA trade, Jen. Large chart reached the zone. That's the first rule. Let's go back to this. So one check. Smalls roll above on the 1 minute. Second check. Enter at the green HVA. Third check. Where is that divergence low, Jen? 87.75. We had room to get there, didn't we? So, Paul, there's your HVA trade. If you took it, you're above the zone, right? It cleared it. This is where I would say, if they get back below this zone, I don't want to be in the trade anymore. And I've got maybe $200 locked in. If they get me, outstanding. If they don't, outstanding. Who cares? I've already been paid per the rules. The big chart is big, Jen. It's huge. So watch this. If I circle, there's 1 bar on the 15. There's going to be 15 bars on the small chart in that. But look what happened inside of that 15-minute bar. 1 bar. All of that. One of the reasons why I think it's so important to trade with a checklist, guys, one of the reasons I think it is so important to be able to look at something and say, are my rules met? If it's a yes, if it's a part of your plan, trust your plan. And then you got to say, my rules aren't met. And be willing to sit on your hands. But that was like the perfect timing, Paul. And look what it's doing right off the zone, right off the outer band with those strong triggers. It's not a home run, guys, but you could definitely make a living off that one. And when the market is really volatile, one thing you're going to see is these bars end up huge, which creates a pretty good amount of risk. I was watching that on Friday. Cav, have a good one, man. Great trading today. Strong triggers up. The path is clear. Huge gap between the small and large, which means risk is kind of big. But with momentum and path, if you bought the area inside of the retracement zone, you have an enormous amount of risk where the market shouldn't go. You've got room to trouble. You've got momentum to push it. You had an area to create a bounce. There's your reversal bar. Reduce risk below the reversal bar. There's your first target. Now we're break even. There's your second target. That's your $300 trade, ladies and gentlemen. You and Hunter said the risk was too high. Jen, could you have entered with a reversal bar? Oh, and just so you guys can see where everything happened here. Guys, this fit my plan. 100%. This fit the KISS plan. This was everything that I look for. Strong triggers, clear path, pull back to the area inside of triggers. It was a little higher risk, but this is the best of the best. And it was about the easiest $300 I could have ever made. If you waited for the reversal bar, you still made it to trouble. Guys, this is what we talk about every day. If you're new in my room, this is your pattern. Some days it's perfect and the risk is small. Some days the risk is a little elevated, and that's up to you whether or not you want to take the trade. I'll show you how you can have the least amount of risk. Insist on what we call favorable large triggers. You're gonna miss some opportunities, but favorable large triggers are wide. They're in the direction of the trend. Both the large and the synthetic are overlapping, which means you have the smallest little retracement zone, which is going to produce the least amount of risk. You've got the smallest amount of areas to put areas, which is going to make it easier to pinpoint entries, guys. That's the best of the best, right? But sometimes it's 32 flavors that kick ass, and you got to put a little extra risk on a trade. This is where confirmation bars pay dividends. You can say to yourself, this is perfect. This is too much risk. I'll get in on the way up, and then I'll just put my stop below the reversal bar. That's your right. You control the entries. Everything's perfect. My entry is not. I choose to wait for confirmation. That's the phrase you can use. That's the first one we had with rules met today, I think, that I've been in front of. So I'm batting 1,000, $300. And now I've got strong triggers, 2 triggers through, but divergence prints, and dang it, now my plan isn't met. Watch this. Take that. Where's my KISS plan? That's my TV plan. My life revolves around whether or not my rules are met. My rules are my absolute lifeline. My rules are everything that I'm looking for. So I can take my rules. If you have snag it, you can just drop them up here. So this is the potential to break trade. And it says 3 out of 4 triggers through the area. So technically, I already don't have my rules met. From a strong top or bottom, a termination that reverses the market, that's a no. Odds favorable, that's a yes. Odds favorable, that's a yes. No divergence, that's a no. And guys, that's such a big deal that it reminds me, divergence, no trade. This is how you optimize your chances of success on those potential to break trades. Doesn't mean the market's going to go down. It means that you don't have the best look for more up. And if it's not the best look, do you have to risk your money? Of course not. You're in control. You're in control of your entries, guys. Sometimes the risk is worth it to you. Sometimes you're like, you know what? It's worth it to me with this look to take that entry. I'm about to crash. See that little hourglass? Boom, there goes Ninja. Another one of the reasons I like TradingView so much. I have yet to crash in TradingView. Let me open this back up. Whoops, I guess I'm on caps lock. Guys, what do you want to talk about? You ever wake up in the middle of the night going, oh, I meant to ask that question? Ask that question, guys. There are 42 people in this room. 41 of you have the exact same question, and everybody's too shy to ask. So be the brave one. Do it for the other 41. Do it for the other 41. I know everybody's wondering. So I'll go ahead and ask it. You guys want to hear a story? I'm going to tell you a story because my charts are loading. When I was 25, I went to a trade school in Phoenix, Arizona. I went to the Motorcycle Mechanics Institute. And they force you to take a theory class Thank goodness. And the theory class lays a foundation. This is internal combustion. This is what you're looking at. And then from the foundation, you do more and more. And we're sitting in theory class, and the instructor's talking about camshafts. Some of you will know what a camshaft is. Some of you will not. I was in the I do not. Rokro, I'm going to answer your question. Just give me 1 second. The NASDAQ is a much higher time frame. And I'll show you. I'll open up my NASDAQ as well, and I'll show you the difference. Guys, I'm sitting in the front row because that's the kind of student I am, and he's talking about camshafts, and I'm lost. And I have no idea what the hell he's talking about. And I raise my hand. And if you've ever been to a trade school, well, it's part of the prison release. There was a lot of Hell's Angels in there and some ne'er-do-wellers, people that are on parole. Couple Army dudes using their GI Bills, and then guys like me that were just motorcycle enthusiasts. And I raise my hand, and the instructor goes, yes. And I say, hey, what's a camshaft? And 47 people in the room were like, whoa, he doesn't know what a camshaft is. And the reality is 35 people in that room had no idea what a camshaft was. And I asked the question, and I had a couple people thank me for that later, but it's okay to ask. All right. First of all, Rokro, welcome to Nexgen, man. It's great to have you here. So we're using the 13.2 and the 5.1s on the S&P on crude oil because they flow. They're super smooth. And when you go to the NASDAQ, I'll open up my NASDAQ here. We've actually bumped it up a few time frames. We've got the 34.5 for your big chart, because that's really the only way to slow down the psychosis that NASDAQ is. And then the 13.2 is your entry chart. And again, it's designed to slow down that really volatile, fast-moving market. On Renko charts, I think, and this is just my opinion, it's worth what you're paying for it, I believe that sitting tight and learning your patterns on crude oil, learning your patterns on the S&P before you try to tackle the NASDAQ is a great way to do it. Momentum is still momentum. Path is still path. Pullbacks to areas are still pullbacks to areas. But look at how fast this market moves. And if I change this to a 5.1 to the same time frame as crude oil or S&P, it becomes virtually untradeable. And I've seen people try and fail. It takes a second to calculate. We'll see what it does. Well, it doesn't even look right because it's not going to be in there, but it's psychotic. And it's still calculating, but it moves so fast that yes, we do bump up. If you're interested in trading the NASDAQ, and that's your right if you want to do it, know that the NASDAQ overruns a lot. So look at how quick it's moving. And this isn't even the open. It's hard to make decisions in a market that moves that fast. That's why we use the 13.2. I mean, are you guys watching this? That's a 5.1 on the NASDAQ. I don't know about you. That doesn't give me time to put stops in place. That doesn't give me time to put targets in place. That is some crazy, crazy stuff. So 13.2 slows it down a little bit. If you are on TradingView, though, a minute bar is a minute bar is a minute bar. I think so, Dip. But the only challenge that you're going to run into, Dip, trading NASDAQ on this one, is there will be times when the volatility is overwhelming. And when it is, If you're using pivots for stop placement, for example, the top of this bar is at 79 and the bottom of this bar is at 59. That's $400 bar right there. And there will be times when the volatility is so excessive in the NASDAQ that the only stops that make sense are going to be hundreds and hundreds of dollars. And if you're trading multiple contracts, no worries, we'll do it again, Rokro. So if you're trading multiple contracts, you could find yourself with $600, $700, $800 of risk on a trade, which, in my opinion, we're too good for that. So here is your NASDAQ. This is a 34.5, Rokro. This is a 13.2, and you can still see how quickly this market moves. And this is about 4 times bigger than crude oil, the S&P. The patterns still work. I mean, there you go. Boom. Odds favorable, momentum, nothing in the way. Pulls back to the area inside of triggers, and sure enough, off it goes into the distance. So the patterns are the same. The speed is exponential. And one of the things about the NASDAQ is if you don't know your rules quickly, it seems to be a little difficult for new users to trade. But you can learn your patterns on a slower, more mellow market. And then once you've got your rules down and you know what it is you're looking for and how you're looking for it, the NASDAQ is tradable. You trade the London sessions? I've never traded the London session, to be honest with you. So if it was considerably slower, I suppose you could change the settings. I've never seen the NASDAQ move slow enough that I would want to trade lower settings. Even pre-market. So pre-market NASDAQ, aftermarket NASDAQ moves like a 13.2 and a 5.1 normally moves. I couldn't imagine having a 5.1 chart on the NASDAQ. And did you see it when I built the 5.1 chart? Watch this. New chart, NASDAQ. I'm going to build a 5.1 chart on the NASDAQ real quick so you can see just how fast those price bars move. You trade off of the 34.5, Marlon? When I was trading the Renko NASDAQ, I did too. It was 100% 34.5. Samuel. All right. Did you go long, my friend? Is that what I'm seeing? Cool. So let's talk about it. So I'm gonna write out the rules. You're in profit now. Okay. There's your 5.1 chart, Rokro. And guys, Marlon wants you to learn his way. Marlon, let him learn their way. It's just fast. What market did you take that on? Right here? So I want you to see something. Samuel? You entered at 29.25, right? So Samuel, you entered right here, which means that that market went all the way down to 22.50, which means 7 points. $350 per contract risk, right? Your smalls got below the large, your trend changed, you had odds favorable, momentum down. That's a hell of a hold, Samuel. It's a hell of a hold. So let me show you the idea behind these potential to break trades. You had momentum, without a doubt. You had the potential to break because 2 triggers were through. These divergences, Samuel, tell you that the market's more likely to push down. And man, they did. They cranked to the downside. And thank goodness they didn't keep going down and they went up and you were able to get it back. Remember that trading is about advantages and trading is about having an edge. And your advantage was gone on that second divergence, and that market blew through everything good. Does that make sense? And I love that you got paid. I really do. I think it's awesome that you got paid. But $350 per contract is a lot of panic. That's what makes us bald and gray. And the position is not closed. You should focus on your trading, but did you see that big ugly red line? Whew. Stopped the market cold, didn't it? It's all about momentum and path. It is all about momentum and path. And you had that big red line, right? And they said, "Oh shit. Samuel held too long. Let's get him back into the profits and get him back up to his target. And then we'll go down like we planned on going down." And they gave you a gift. Looks like they're about to give you another gift. The other thing I notice on your chart, Samuel, is you're not trading with stops and targets. You are going commando on this bad boy. ATM strategy. We're just so good at what we do. We know where the market shouldn't go, right? We know where it should stop. That's what we focus so heavily on every day. So the ATM strategy is your stops, it's your targets. And there's a lot of pre-built ones in there. So you could go down and you could trade a 2-lot and have a 12-tick stop and have targets already put in. And there's a lot of options for you there. Or you could build your own. But let me go to the instructions real quick. So you could choose one of the pre-built, or here is how to create your own. And if you need help, let me know. But the pictures talk you through everything that you need to make it happen. Stops and targets. We're so stinking good at what we do. Marlon, this is awesome, but it doesn't tell me anything. You went short somewhere, and it is still going down, right? So this is what we call a flex. And Marlon, that is an awesome flex. And I'm sure you have a reason for your entry. And I'm sure you have a reason for holding through all of the areas, right? But none of them are evident on this chart. So good job. 23,260. And I think it's funny that you said, guys, please learn this. So guys, please learn that you can take a mystery entry and hold through all sorts of problems and make $8,700. That's not a plan, right? That's not a recipe for success. How do we make it a recipe for success? Well, we open up that workspace and we go back. This is the NASDAQ. And where were you in, Marlon? You were in at 23,260, which means you were in probably right there off the fib with everything below it. So when a termination reverses the market and I get below trouble with momentum, I'll sell trouble. And then because I haven't reached an area, I'll hold. And I don't know why you held through this one. And I don't know if your exit conditions were met here, but I sure hope so. because they ramped up, right? The entry logic makes sense. Get below, sell a fib. I can't figure out why you held so long. And sometimes I'll do that. Exited due to consistency. Okay. Again, I don't know what that means, but I'm glad you exited. I hope you didn't give back too much of that $8,700 before consistency was met. 3 divergences in the same price range would be your heads up in case that's not a part of your plan. 3 divergences in the same price range told you that the party was over. And sure enough, it's been over ever since. And now 3 divergences in the same price range, the buyers are going to struggle, and there's a good chance the sellers are going to take over, at least for a little bit. So good stuff. Guys, I'm telling you, there are a million ways to make money with this software. You will find yours. Hopefully you're not trading in determination, trying to make a living. Hopefully you're not trading without momentum, trying to make a living, right? Samuel, will you give me a why that you see that resistance is still holding? So guys, one of the things that chart reading does for you is you'll understand the direction of the market in a glance. You'll understand that momentum is present in a glance. You'll understand that there's nothing in the way in a glance. You'll be able to use the smaller, faster chart to take advantage of that. But the same is true when you can identify that there's nothing in the way. You're also capable of recognizing that there's something in the way that could stop the market. So you understand direction. You know where the market is likely to go based on those first 2 advantages. You know where it's likely to continue in that direction based on small chart entry. And it's okay to get paid at these fibs. And if you entered up here, it's okay to get paid at these fibs. And if they produce a short trade, smalls below the large, 3 triggers through from a strong top, there's your pullback to resistance in the range there, no divergence. Where's my first trouble spot? Well, my first trouble spot is 63.2250, where the divergence low is. Does that make sense, everybody? If I enter here, I have to put my stop where the market shouldn't go. That's a lot of risk. That's a lot of risk. They're still in the retracement range. They're still below the areas. If I get a reversal bar, I'll reduce risk 2 ticks behind it. There we go, 1, 2. If my first profit target is hit, oh, it hit and didn't fill. Come on now. If my first profit target is hit, that would have been my cue to go break even. Because it hit and didn't fill, I have to make a decision. Do I go break even anyway, or do I hold the trade? What do you guys think with momentum? 3 triggers through, no divergence. There's our first target. I go break even. If divergence prints, I'm obligated to exit this trade because it's not a clear path. My second target is 200, but I'd rather put it where the market may stop. So I'm looking here. If divergence prints, it's an exit condition. If they hit my break even, who cares? I've already made $100. Otherwise, we want to see if they can get to trouble. Make it so you can see where everything happened here. Divergence hasn't printed. I haven't reached trouble. So we're just holding. We're waiting. What's going to happen? Pretty cool, right? How long did that read take? Took me about a second to figure out that that was my entry. And because I know my rules like the back of my hand, I didn't hesitate. I said, this is perfect. Odds favorable. Potential to break. Strong top. Perfect entry. Know where my stop goes. Guys, I had $100 in the bank before I ever hit anything that could create a bounce. Now we're just waiting to see if it creates a bounce. Still no divergence. Still nothing to lose. There we go. 2 times today. 2 times today we've had the rules met live, right? 2 times today I've managed. One went the distance. One just got stopped out for break even. $400 so far today on 2 trades. If that's the best that I do every day for the rest of my life, if I can never get over $400, 6 figures. Trading is about advantages. Trading is about having an edge. Trading is about knowing exactly what you're going to do if I have momentum and 3 triggers through, then I'll enter below the area inside of triggers as long as there's no divergence. If I get a reversal bar, I'll reduce my risk. If a target is hit, I'll go break even. If divergence prints, I'll get the hell out of that trade. Everything was if then, guys. I don't have to put my emotion into it. I don't have to put my opinion into it. All I have to do is learn that plan. Learn those 3 simple rules and then grow from it. So I hope that makes sense. And that's why we trade with stops and targets. There's that NASDAQ. Support's holding. There's that S&P. Oh, I forgot I crashed. We don't have crude oil up. So let me open crude oil for you guys. If you have a question, do me a favor, post it in the room. If you have a picture that you don't understand what the hell's going on in the market, post it in the room. If you didn't believe that that could stop the market, if you didn't believe that could stop the market, if you didn't believe that or that or that or that or that could stop the market, let's do some study on termination conditions, guys, because what you have is the golden goose. Every one of these says don't trade into that line. That was only 2. That was 3, but into a term. That was only 2. And right now we're only 2. Every one of these said don't do it. That was the potential. And I believe that one actually was a good one. That was the potential. And well, that may have been the only 2. 3 divergences, only the potential to break, guys. This is a low probability scenario. I hope that makes sense. I'm going to take like 3 minutes. When I come back, guys, we'll talk as long as we need to. The read here is I have momentum. It's only 2 triggers, and divergence keeps printing. It's not my money if they decide to go down. Now there's 2 divergences with only the potential. It still might go down, but it's not my money. I already made my money. I'm going to sit on my hands, wait for it to be better. Not yet. Dip, not yet. Fibs are not available on Chart Prime. John Novak is working with the programmers, and they think that they found a way to get tricky on the servers to actually pull them off of NinjaTrader to superimpose them via a server and make them available. They're working out the little final bits on it right now. So not yet. Chart Prime gives you the support and resistance. And what's cool is if you look at it, it's pretty darn effective. And it's even more effective when you follow those momentum indicators, and even more effective when you have a plan to capitalize on the move up. So it's in the works. It is in the works. They are working diligently trying to make it happen. It's just not quite there yet. Not yet. Three divergences in the same price range. Absolutely. So when we talk about support and resistance in TradingView, treat it like a fib. If price reaches it, don't trade into it, right? If price reaches it, don't trade into it. It is a little different, Dip. Yeah, so green is support. So anytime the market moves down, maybe this is a language thing. Accepted vernacular. Where's my arrows? So if the market's cruising down anything in the way behaves as support. And if the market is cranking up, oops, sorry. If the market's it's moving up, anything in the way we call resistance. So your supply and demand zones show you these potential bounce points, right? So the market was cruising up, there's your resistance, and sure enough, they couldn't break it, and they kind of go sideways. And yesterday was just a huge pain in the ass. So if you were long here, you could use it as a target. And if you were looking to see if there was a short somewhere in there, if you were short here, you could use it as a target. And because it's 15-minute charts, they do move a lot slower. Let's get back to where we are. So the large chart is down, strong triggers, weak side of the small. I'm not really looking for a long trade here because of the strength of the triggers. And if I take a short trade, I know where on that large chart it's most likely to create a bounce. Does that make sense? And then when you put the small chart in, they're pulling back to trouble. The trend is down, but my 1-minute chart is strong up. So I can't fight this. I'm going to look for maybe a higher spot, which would be somewhere up in this area. And then instead of fighting the momentum, I'll look for a close below the small triggers to see if that large chart still wants to push down. So this gives the overall. This is your refinement chart to be able to take advantage of it. And if they keep heading up, I want to be above this divergence high. I want to be above 88. I want to see these roll eventually to make longs easier. So as long as everything is down, well, it looks like the HVA, and now it's getting below the small, and we'll see if they go retest. They didn't get, well, they did get to my area, didn't they? And now we'll see what happens. The arrows and triangles, so the green arrow, I'll tell you what, give me 2 minutes and I'll come back and we'll talk about those market flow things. Sorry, I'm super hydrated right now and I've got to fix that. Back in a second, guys. TradingView users, Remember when we said because of this look, we're only looking for down? And we said it had to pull back, close below, and that was room to retest, guys. Your close below wasn't until 63. But if you wrote it all the way down to 38, guys, that's 25 points. That's a lot. That's an awful lot of money in a very short time. I hope some of you caught it. So these arrows dip are, it's kind of a leftover from Renko. This is what we call a market flow signal. And these used to be a part of the Renko. So when you would use market flow, let me see if I can find a market flow chart, because it's probably easier to read on Renko. What you would get, I don't want the NASDAQ, I'll do it on crude oil, is these green arrows up and these red arrow down. What they are is these are what we call market flow signals. So if I was looking for a trend trade short, but it wasn't perfect, this arrow, when I get a breakout bar up and it's followed by a down bar counter to it, you'll see the arrow. So if you get a breakout bar down and then an up bar, you'll see the arrow. So these arrows used to be signals for entry when the trade wasn't perfect. And you were like, okay, I need a little bit of confirmation. I'll let the market flow chart tell me. Market flow is a part of TradingView, but we're not using these arrows because, I mean, look at it. Everything is screaming down. Who wants to go long because of a green arrow? What a horrible idea. What we're really using on market flow here is we're using these HVA lines. So when triggers are strong, we're buying the green line. When triggers are strong down, we're selling the pink line. When the market is coming from a termination on the large chart and it rolls, we're buying the green line. So it works its way into rules and momentum trades. It also works its way into what we call the high volume area trade. But the little arrows don't fit into the plan anywhere. Does that help? Awesome, cool. Great questions. Guys, don't ever stop asking questions. So Chart Prime, Samuel, is not Nexgen. Chart Prime, are you using TradingView or are you just on Renko? Chart Prime is designed for TradingView. That's what gives us those areas of support and resistance. It's a monthly subscription. It has nothing to do with Nexgen, guys. These are not Nexgen indicators. This is John Novak going through, testing as many as he could find, and deciding that this was the best choice. So it's $67 a month. If you pay annually, it's only $40 a month. They do have a 20% code, which means if you buy it annually, it's, I think Pablo told the room last week, it's like $389, but that's the link to it. And just know that the same way TradingView is not Nexgen, it's a platform to run Nexgen indicators. And Chart Prime is just an indicator provider. Strong triggers, and now we're starting to get below the area. So it's nothing but shorts. If they pull back above the area, I'm not trading directly into it. Hunter, strong top, odds favorable, perfect entry, easy money, break even, rock star. Do you guys see it? What is this, Hunter? Day 8 with the software? Day 9 with the software? Learn the patterns, guys. Once you learn the patterns, there's zero emotion. It either is or it is not, right? It either is momentum and path with a pullback to an area inside of triggers, or it's not. It's either rules met or it's not. And I know it's easy for me to say that here. I've been reading these indicators for 6+ years. If you do a little bit every day, a little bit every day, where you say, you know what, I'm going to get really good at strong triggers. And guys, this is all on the spreadsheet that I give you each and every morning. I am going to focus on strong triggers. I'm going to dedicate 24 hours of my life to never questioning whether or not my triggers are strong or weak. And I'm going to use this as a cheat guide. And then I'm going to spend 2 days making sure that I understand what it means to have a clear path. So first I'm going to learn momentum. That's the first rule. It wouldn't hurt to learn strong top or bottom. Not mandatory for the trend trade, but when a termination reverses the market, that's a strong top. Has to be no triggers above or below. This is the precursor to the highest probability. And then you take a little time and go take some pictures and learn those strong triggers, and you're like, man, momentum is kick-ass. I can't wait to have momentum. And then you got to say, okay, price reached an area. The triggers are above. Let me wait for the reaction. Small's got through. Large are still above. It's potential. Let me make sure that it's good. Let me manage assertively. 4 triggers through. Now I have a clear path. Now my checklist is met. Let me go define my entry. And guys, if you go through this process and just get good at momentum, path, and entry, one thing, one trade, one pattern, it opens the door for the rest of the patterns. And there's your checklist. And nobody in the history of this checklist has ever followed it and been able to present me less than 70% winners. True story. So use that, guys. Use that spreadsheet. Go through it. Study these. Study those client trade patterns. If you've been in my room for more than a day, you know that the software is effective. You know it gives you everything that you need to be successful. But it's like an elliptical, guys. If you don't get on it and learn how to use it, you're not going to make any progress. If you never learn how to swing that hammer, how are you going to build something, right? If you don't ask what a camshaft is, what are you going to do? 8 ticks? Are you kidding me? So you entered up here at 2750, below the fib, with momentum. They didn't get you, and look at the hold. Everything below the fib. No reason to exit. And then you get those small triggers cranking down, and you're out at the fib. 26 ticks. That took 1 day's worth of conversations, 8 ticks. Now I got to change your name. You got to change your name to 26 ticks. That's amazing. On a 6 lot. Every 4 ticks is $50, 300. That's an $1,800 trade. That's an $1,800 trade. 1950. It's time to buy some software, 8 ticks. There might be something to this Nexgen stuff. Great trade. You have already? Love it. Love it. Well, then we need to put a different check next to your name. Have to change your status. You've had it for years? Really? For about 6 years. Man, you were starting when I was starting. We need to change you to owner. I'm going to put notes on that. You should have a big green check next to your name. Well, no wonder you're so good at this stuff right off the bat. Lost the computer it was on. Oh, man, all you had to do was call when you got a new computer. And the cool thing is if you're interested, because you are an owner, and you want to take advantage of like our funding company, and you want to use TradingView, you've already paid for the indicators. You'll get those. That's part of it. All right. TradingView people. Remember when I said that even though price is trading below it, right? Even though price is trading below it, if they get back above it, I'm not looking for that short trade. These tails are awesome, guys. And look at that. Gets back above it. Now you're on the wrong side of something that could stop the market. Termination holds. Smalls above the large. The HVA trade says if you get a pullback to that HVA line, buy it. No reason to have a lot of risk on it. But they may not come get us. Paul, do you see it? Jen, do you see it? That's your HVA trade again. Zone holds on the 15. Smalls get above the large on the 1 minute. My job is to buy that HVA line. And I don't know if they're going to come back and get me, but that's the trade. That's the rules. That's the checklist. And I got it quick because I've been doing this a while. So I've got it instantly. So you guys that are learning these new things, learn your checklist individually. Learn the pieces, right? What is reaching an area on the 15? Well, it looks just like that. There's your area on the 15. What's it look like when the smalls get above the large? Well, it looks like that. Where is that HVA line? It's that big green fat line right there that says, guess what? You recognize the potential for a bottom. Let's see if we can't make some money going up. Pretty cool, right? Same stuff every day. Every darn day. Rocro, how we doing? I know it's day one. A lot of language that doesn't make sense. Let me know if there's anything I can do to help clear it up. Keep it simple first, guys. If you're brand new with me, Trend Trade Simple for Ninja Trader. Goes through the individual parts, right? Lost NPC, Miss Shannon, how are you doing, my dear? Feeling all right? It's starting to click. Andy V is absolutely killing it. Chariot taking Rockstar entries. Victor is doing it. Need to see everything clear through all the lines and colors. Yeah, it's a lot of noise at first, isn't it? You're not dead yet. Do you feel happy? I'd like to take a walk. So, Rocro, you may have missed this in the beginning. Trigger lines are your lifeline. Trigger lines, smalls and large. That's all you need to know. They'll define momentum. They'll let you know if areas are likely to stop the market. They'll even set you up for great entries. And all you need to know is small triggers and large triggers. So there's that picture. You can steal it right out of the room. The second thing is both charts have areas. Areas have names. So don't worry about what creates them. There's the names of your areas. There's divergence highs, divergence lows, mid bands, Fibonacci support, Fibonacci resistance, yellow 1-to-1s. Now, what you'll take from trigger lines and areas is 3 advantages. That's it. 3 advantages. You're going to be able to recognize momentum using the trigger lines, just identifying a separation. You're going to be able to recognize termination conditions when there's something in the way using the areas. And you'll be able to define your entry when you have an area inside of triggers on the small chart. And that's really all you need to know. You don't have to know the math that goes into them. You don't have to know what was on the front page of the Wall Street Journal. You don't have to know what Trump said about this or what they said about these or what Fox or CNN is doing. It all goes back to recognizing 3 things. Momentum first, then clear path, and then the first entry is very clearly defined. We talk about it every day. But once you understand these 2, there's a million ways to make money with the software. There's so many ways to get in. There's so many ways to have advantages. And each entry, each type of trade has a different management plan. So if you keep it really simple and focused in the beginning, focus on 1 or 2 trades, you don't find yourself confused. And it's a lot easier to find the success that you're looking for. And then, of course, I give you the KISS plan. So if you're a NinjaTrader user, you have everything laid out. How to get in, how to manage. The only thing you have to do is learn the rules. And that is a byproduct, and that is a direct result of participating in the room, because 15 hours every week, guys, you have access, you have feedback. We'll talk about the good, we'll celebrate the victories. I'll call you names once I get comfortable with you. We'll talk about the things that need changing. And all you have to do to have a live coach Monday through Friday is post in the room and tell me what you see. Hey, Miss Kim, I didn't see you sneak in here. Nice to see you. Got the dreamer in here. It's nice. I'm seeing a lot of new faces, guys. I'm seeing a lot of new names in here. Dip, it's my opinion, and my opinion means nothing, that if I am going to learn something new, I'm going to learn the thing that has the highest probability of getting me paid consistently. That's the high probability trend trade. And we do this high probability trend trade. But I haven't pulled this out in a while, but I'm going to do this real quick. The high probability trend trade is designed to teach you to read your indicators. It's designed to teach you to recognize momentum, to teach you to believe in that clear path, to teach you to identify the entry. So reading your indicators is 95% of your day, every day. Reading your indicators is what identifies those advantages. Whoops. So I used to teach off this PowerPoint every day, but now we spend more time in the live market, guys. Chart reading is about 90% of your day. 10% of your day is actually trading. But once you understand those core rules, Dip, and Rocco, and everybody else, you will understand where the market is likely to continue. And that's your entry for the high probability trend trade. You'll understand where the market is likely to go. Those are those big Fibonacci areas that stop the market and kill your forward progress. And that's the same when it's likely to stop. It's that giant red flag. It's that huge red flag on your large chart that says, here we go, minimize. My goodness, where are my charts? It's that giant area that says don't do it. It's that divergence low that says don't do it. Those yellow 1-to-1s that say you're gonna lose, don't do it. So from that very basic high probability trend trade, what happens is you get this awesome awareness of what could happen in the market. And it's almost like having a magic 8-ball. And then again, going back to it, beating the dead horse, there's your plan. Learn the high probability trend trade. And then through simulation, study, class feedback, and continuous practice, you're going to find a way to do more. You're going to find a way to get more. And this plan optimizes your chances of success. It's the absolute best entry you could ever take. It's the most mechanical, pragmatic, emotionless way to manage those trades until you can read your indicators. All right. That's no good. Steve, thank you for not posting them during class time, he said in a smart aleck voice. But that's all right. We can hang out. And then you go into those potential to break trades, guys. And then you just start seeing everything. So I like, personally, having the highest chance of success. And they say that confidence comes from the memory of success. So if I can get my dips and my Rocros and my lost NPCs, and I can get my Brians and my Petes and my other Brians and my Dreamers and my Pablos in a position to make money while you expand on the education, right? To give you a plan capable of winning more than it loses with just a few moving parts, well, then you start creating great things from that solid foundation. And that's what the high probability trend trade is. It's 75 feet of concrete to build your trading skyscraper on. How's that for a visual? How's that for being really, really wordy? Darn English lit majors. There's another area that could stop the market. Guys, I am going to